Today is October 24. Hello everyone, this is Daily US Stock News by Kyle, bringing you the latest stock market updates every day. Please like, comment and subscribe and stay tuned for more videos. Tesla's stock surged after its earnings report. Today, the US stock market saw a broad sell-off. The three major indices continued to decline throughout the day, with a collective drop in late trading. In the sector heat map, only defensive sectors like utilities and insurance were green, while everything else was in the red. The Big Seven led the decline in tech stocks, but Tesla surged in after-hours trading. 1. Tesla's gross profit margin was 19.8%, higher than the expected 16.8%, and up from 18% in the previous quarter. Free cash flow was $2.74 billion, exceeding the forecast of $1.61 billion. The Cybertruck achieved a positive gross profit margin for the first time. Tesla expects a slight increase in vehicle deliveries in 2024 and plans to launch a cheaper new model in the first half of 2025, earlier than the previously anticipated second half of next year. Energy storage development is expected to more than double year-over-year. The stock surged in after-hours trading as investors were excited about the core automotive business returning to growth, especially with the gross profit margin rebounding, easing concerns about further price cuts. Tesla's better-than-expected earnings report could improve market risk sentiment. 2. McDonald's stock plummeted after multiple serious E. coli outbreaks occurred at McDonald's locations across the U.S., making dozens of people sick. However, the CDC stated that the actual number of cases might be much higher than currently known and could involve more states. Preliminary investigations suggest that some of the illnesses may be linked to onions used in the 4-ounce beef burgers. 3. Steve Schwarzman, CEO of Blackstone, the world's largest alternative asset manager, said in an interview in Tokyo that regardless of who wins the presidential election, the U.S. will likely avoid a recession because both candidates have policies that promote economic growth. Currently, U.S. bipartisan candidates' proposed policies, such as Trump's tariff plan and Harris's proposal to boost affordable housing, will significantly impact companies, including Blackstone. 4. Norway's sovereign wealth fund, the largest in the world, managing $1.8 trillion in assets, previously issued a warning that growing economic uncertainty and concerns are heightening the risk of a global stock market decline. They stated, "We invest 70% of our assets in stocks and 30% in bonds, which is our typical investment strategy, but now it's time to be a little more cautious." 5. NBIM CEO Nicolai Tangen said that global inflation pressures are unlikely to ease in the short term, which will put sustained pressure on the global economy for the next few years. The fund is preparing for weaker market performance in the coming years. In addition to concerns about inflation and high interest rates, unexpected factors may be more worrying than known risks. 6. Malaysian palm oil futures prices have surged to their highest levels in over 2 years, reflecting global market reactions to tight supply and policy changes. This surge has drawn market traders' attention to future trends and the potential risk of pullbacks. The key reasons for the price rise include revisions to Malaysia's export tax and Indonesia's increased palm-based biodiesel blending ratio. In addition to policy benefits, production forecasts cannot be ignored. As the world's second-largest palm oil producer, Malaysia's recent downward production forecasts have further fueled bullish market sentiment. 7. Bernstein predicts that Bitcoin will rise to $200,000 next year and become an important asset for businesses. The total amount of Bitcoin and Ethereum ETFs held by global asset managers has increased to nearly $60 billion, up from just $12 billion in September 2022. The report states that the launch of Bitcoin ETFs has been one of the most successful cases in the history of exchange-traded funds, attracting $18.5 billion in inflows since their introduction in January 2024. With institutional investors flocking to Bitcoin, ETFs are becoming an entry point for large-scale investments in digital assets. Bernstein reports. The report also notes that 10 leading asset management companies, including some well-known firms, have already set up regulated Bitcoin and Ethereum ETFs.